spoken. We had our first semi-week NFP number today that the market is making hay out of. Okay, so 105 was my area in the dollar, that if it took it out, it would seal a top. I wasn't sure if it's double top that we might get one more run to take out the stops, but sometimes it doesn't. So here we are. I know everyone says, oh, well, you're not short the dollar, you missed it. Maybe I missed this first wave down. I believe that in my skills to tactically look for an entry. I didn't sell the high in S&Ps, but found a rebound to sell pretty close to the high. So the way I'd look at it is really the weekly close is important. But I pointed out on, I believe it was Monday, that the 2-week off number wasn't going to be hard to take out 106.11, and then next week it's right around the same area. So I'm going to be looking for rallies to sell now in the Dixie. And something else I talked about on the Monday video. So 104.50 actually completes the double top pattern, 5.5, 6.5, 4.5. So I'll be looking for shorting to short it back around this 550, 570 level sometime next week. And we do have ISM coming out. So the jury has spoken there. I think this is an important top. The reason I don't think anyone is late is that it could just be starting, and that eventually next stop would be like 103.80, which would take us back down to par and some important weekly moving averages. And I'm looking for maybe something like this from here. Initially, I think we could see 95 and then possibly under 90. So you're not late. If this is a big failure, failing to get back over this high, very negative week, yields have peaked. There goes the dollar advantage on the interest rate differential that a lot of people are talking about. So that's my statement on the dollar. So with that happening, yields, I said there were two alternatives in yields, that we're either going to stall out here on the 10-year at the 78.6 retrace, which was at 474, and that's, or make one more run for a third drive. That didn't happen. So here we are. I think that yields could do something like this from here. So, you're talking about 350. So yields are down. I'd say the strangest thing that's going on right now is the muted response in the precious metals with a weak dollar. Silver down 14 cents with a weak dollar, which tells me that there's still, some work to do on the downside. Gold only up $3, 2250 to 2200 was my target, so there's still some downside left. And S&Ps are having a heyday too, up 35, 36, right at this daily 50-week moving average. I've been talking about the potential for 5150, and we all know that 5150 was an important area because that's where it really accelerated to the downside. Maybe we see that next week. I'm already long the VIX, which is going to be under pressure today, and I'll be looking to add and take some short positions. I avoided a disaster in Apple, okay, because I got out here. And you know why I got out? Because Mike was talking about call sweeps in Apple. All right. So you have to pay attention to these option sweeps. And you know what? You need to pay attention to what the information that Mike is disseminating in our room, because these sweeps can keep you out of trouble, give you the right side of the market. I didn't buy Apple, but you guys know I've been short and selling rallies for over a year now. And now it's turned into leadership. Maybe what isn't going to be leadership could be things like Microsoft and NVIDIA. We'll see. The S&Ps aren't going to have an outside week to the downside. I guess I shouldn't say that. It's still early in the morning, but I still favor a break. And I don't know, how can that happen? How about people moving away from dollar denominated assets, which includes stocks, if we're going to have a bear market? Uh, you know, that's going to keep people off sides, because I've been talking about how really, the dollar has really didn't get much of a bid during risk off. Okay. And how the euro was holding up. I was thinking that we could still take out 106 one more time, but today's a day. And I respect, I'm not going to launch today out of emotional, oh, I have to be short. I take a breath. Everyone take a breath. And you have all weekend to prep for it. Markets do not move in straight lines. There's going to be an opportunity to sell into this. Um, oh, yeah, and I wanted to cover TLT. So we're getting that. There were a few days inside the formation, outside the formation, but we're going to open at 90 today. Though here we are, 89.79. And unless we get a real bad failure, that's a nice week. We're back in the wedge. There's a daily. Okay. I think you could go with this close. You're wrong under these lows, which we had earlier in the week. So this signal looks pretty good. Here's your weekly. Be a heck of a rally in bonds once we get going. 92 is going to offer some resistance, but we get back above this over 93. You could be looking at 104, 105, something equal to this, 20 from 87, even 107. So, it's possible that eventually what happens is there's a move towards the bond market. Bonds could go up and the dollar could go down at the same time, but it's possible that people start getting nervous about growth and S&Ps end up failing. I still think there's one more wave to the downside in the S&Ps of at least this magnitude. And if here's your breakdown in S&Ps, back under 50.20, it's 100 handles from here. This break was about 350. So 350 from 50.20 actually gives you 46.80, which is deeper than what initially I was looking for, was the 4,800 level, and that's 48.22. But maybe we travel to halfway back. 46.85 is that. That would be a pretty good shakeout. So to me, I think that'll probably be, still corrective, and we could rally again. So looking for lows later in the month, early June, and I think that includes one more break to the downside. So dollar peak, bonds bottomed, S&P sympathy rally, uh, gold and silver not finished to the downside. So perhaps we're going to get those levels that I've been hoping for in GDX. That's going to come in around 30 and a half, which is about another 10% or so from here. So they're calling it a bit higher, but halfway back's 30.71, 61 back's 29.52. We could do that in a few weeks. So we'll see what happens. That's my re-enter back up the truck level. I hope that what I've said to you, and if you were short the dollar going into the NFP or long bonds going into the NFP and the number went your way, I have this to say. I have this to say. That was luck. Okay. Lucky trade. So congratulations, though, on guessing right. Now traders go to work and look for entries after the evidence has been presented and the verdict is in. So everyone have a great weekend. I think I've covered everything. We had a pretty lousy week in energy. That looks pretty vulnerable to me. So I don't think it's in the oils. Commodities taking a breather. So see everyone in the room. There'll be places to try this and try this in the coming days. You know, maybe we get a pull back towards 24 in cable. And Aussie, nice rally, but maybe we get a pull back to 4.5 or so. So we'll see what happens next week. Don't chase anything. CAD was a great short, you know, with us putting in a failing rally before while we had a double top. So here we are. We'll be looking for shorts on pops in the dollar next week and still being patient for a buy in the miners. And S&Ps, I'm still bearish. We could still see higher levels early next week, but I'm a seller of strength. Continue to be that postured that way. Have a great weekend, everyone. Do your work over the weekend. You can't be lazy. Spend time doing your analysis over the weekend. And that way, when the market does whatever it does, you're not analyzing on the fly. You're not seduced by impulse trades. You have your plan. And when price gets to your important levels, you execute. See everyone Monday. Don't just count your pips, count your blessings. Adios.